Hello everyone. This week's trade is silver again. Silver has finally done what it's been threatening for a decade, a clear break above $50 an ounce, extending all the way to 54.5 before a sharp pullback. But this move marks a clear new structural phase, echoing the 2011 rally but under very different market dynamics. Speculative flows, rebounding industrial demand, and a massive short squeeze driven by soaring borrowing costs. Let's check the technicals. Shifting to the short term, because volatility is open clear opportunities for active traders. We can see silver been moving inside a steep ascending channel, and after touching the all-time high above $44.5, it dropped nearly 6% intraday before stabilizing just above $51. Momentum has cooled. We can check the RSI. It eased from around 90 to the mid-60s. It's a healthy digestion phase after a sharp run. Now, the lower band of the channel has been tested multiple times with a few false breaks before what now looks like a clear breakdown. It's worth keeping in mind silver's market is far smaller than gold and lacks official demand, which amplifies both squeezes and drawdowns. So a potential 10% move lower could bring prices toward $47, with $50 acting as the key psychological and technical support. On the broader charts, momentum is cooling from extremes, suggesting a consolidation phase before another possible push higher. But the key levels to watch this week for resistance, we have $53 and we have $55. The support is quite important. We have $50. Key psychological support, as we said, and then $47. A retest of the main break at 51.8 looks likely in the short term. So for now, silver remains in a volatile but powerful uptrend, digestion mode, not reversal. But its setup could offer tactical opportunities for short-term sellers before the next leg higher.